What's up, everybody? Welcome to the community call. My bad, or two my bads. My bad on last week. We didn't have one because I was traveling, and then my bad on the one from the week before because I fucked up the recording. So, 0 for 2 in the last 2 weeks, but we'll get it right this week. This week, we're joined by Joshua from the dAMM team. Is that how you guys pronounce it, or is there some like community-based pronunciation that I don't know about?
Oh, we say dAMM, but
Uh,
occasionally we start slipping into calling it damn finance.
All right, so dAMM or DAM Finance is here. For those out of the loop, they made a proposal. Let me share it in the community call chat here. Sammy, no, we can't hear you. But the summary of the proposal, I'll read the summary and then I'll let you kind of walk through the motivation and some of the details of dAMM. So the summary is contribute Butterfly, optional amounts at the time of the snapshot from the Treasury to seed the Butterfly dAMM pool. This will allow the redacted cartel the ability to earn reliable yield in the form of revenue to the Treasury in return for providing market makers and exchanges access to make markets and list Butterfly. So Joshua, from here, you could take it, introduce yourself, and also introduce dAMM, and then we'll kind of let the community ask any questions because I know they had a lot of questions after the proposal was actually shared. So I'll let you take it from here.
Yeah, sounds great. Thanks so much for that. Yeah, that's kind of the high level. I guess a little bit of background. So, dAMM's a protocol incubated by System 9. We started a market making firm a couple years back and really specialized in altcoin market making. And this is our first incubated product. I think like the analogy we always use is like FTX Alameda or like Bebop with Wintermute now. And kind of where the inspiration for dAMM came from was just seeing token issuers consistently being taken advantage of by market makers. I mean, in absolutely shocking ways, like getting several percent of the token supply in the form of a call option or charging hundreds of thousands of dollars a year in fixed retainers. And what we wanted to do was build a platform that allowed issuers to actually get paid for their market making and not only rely on one market maker to provide liquidity for them, but allow them access to anywhere from 5 to 10 to 15, all through a on-chain protocol. And so that's where dAMM came from. We just announced a similar partnership with Ribbon. So Ribbon's seeding the RBN pool. Really excited to work with them. And we're onboarding kind of the high level is seeding Butterfly to allow market makers that we have onboarded. That includes System 9, Kronos Research, Ledger Prime, and we have about 5 or 10 more that we're using through Credit Oracle that we'll be announcing in the next few days. Basically, a clearinghouse that has a number of major market makers onboarded already as well to borrow and to make markets. One of the big questions that we get from a lot of issuers and a lot of DAOs is how to avoid, like, how do we disincentivize or punish short selling and incentivize market makers to provide actual market neutral liquidity. And the way we do that is the Credit Oracle provider we use that does all of our KYC and AML. They get exchange account access to every single one of the market makers' live exchange accounts, including all the ones where they actually borrow tokens from dAMM. And we get to see into their accounts, not seeing exact trades or anything like that would kind of potentially risk their trading strategies or anything like that. But we get the ability to see, hey, how long, how short are they to the market? And the more exposed they are, the lower we set their borrow limits on a minute by minute basis. So we have a credit risk team that's dedicated watching over all of the addresses and the accounts of all the borrowers we have. And so if we ever notice that they're moving tokens to Binance and it's very clear that they're engaging in short selling activities, we punish them in terms of lowering their borrow limits or outright removing them from the protocol if there's a pattern of this behavior. So really, building the first market making platform is kind of our goal here. So yeah.
Dope. Hold on. Sorry, I was muted and I was starting to ask the next question. Yeah, so what is the sort of timeline that you guys have for like an actual, is it already live or is that something you guys are working on, or what's kind of the roadmap there?
Yeah, that's a great question. So we just completed all of our security audits. We had DDAO audit the protocol, and that's all public on our in our Gitbook on our website. The protocol will likely be going live on July 31st or August 1st. So that'll be the first Genesis pools we'll be announcing. There'll be about 20 tokens, a lot of high market cap tokens, and the DAOs and treasuries we're working with now. So that's the timeline on it. And then at the 3 month mark of the protocol being live, we'll be doing a snapshot of all the DAOs that have contributed or done co-marketing with us. And we'll be doing a retroactive airdrop that's mentioned in the proposal as well. So there will be a dAMM airdrop to the redacted treasury as well, depending on the pool TVL at the end or at that 3 month snapshot.
Yeah, sweet. And remember, everybody, you can ask questions in the community call chatter. It looks like a couple of people are typing. And then XAG, I know you had some questions earlier in the week. So, Joker Frog asks, what percentage of our token supply would be used to see this pool to start? I think I'll rephrase it a bit and ask, like, what do you guys think would be like a good way to seed the pool, or what's sort of like a recommended amount you have, so on and so forth?
So, another big thing too is to, specifically, and this kind of leads back to the short selling question. We're recommending issuers generally allocate between 1% and 4% of the circulating supply to a pool, 4% being the absolute high end. And the reason for that is we don't want a market maker to be able to have, enough capital or, in the case of a malicious actor, to be able to actually short sell where it'll actually affect the price significantly. I think the rough calculation we did was of the circulating supply, I think 250K is like 1.7% or something close to that. So that's kind of why we recommended that as the middle amount, because that's kind of the, what we see the sweet spot as from the Treasury's point of view.
Gotcha. Yeah, and for everybody who hasn't checked out the proposal yet, there's kind of like three, or really four options, but the three that actually have dollar values is 100K Butterfly, 250K in Butterfly, and then 500K in Butterfly. So those were the three amounts that they kind of recommended. So they're not asking for like 10% of the total supply or anything like that to seed.
Oh God,
The
no,
best ones.
no, no. Yeah, and another thing too is we actually we have a lot of exchanges that are working with us really closely. Like the three big ones, I'd recommend you guys checking out if you're not familiar. Are Woo Network, Gate.io, and Ascendex. They're backing System 9 and dAMM, and a lot of the DAOs and tokens that we're listing. They are dying to list. So we've already had a number of conversations with them about listing Butterfly. So yeah, that's definitely part of our borrowing and who we're lending to as well.
Cool. And another question is there any way to track if market makers deploy capital to exchanges and hedge by shorting? Or I guess like a broader question is there a way for communities to kind of like keep up with the way these funds are using? Or if there are like negative impacts, do they just have to feel those later? How are you guys like thinking through that?
Absolutely, yeah. I mean, we were actually planning on launching dAMM much later this year, but the Celsius and BlockFi meltdowns are kind of a huge push for us to launch now because we see dAMM as like a hyper transparent, mostly on chain version of kind of BlockFi and Celsius, and that gets rid of a ton of the risk that's associated. So there's no questioning like, I don't know if you guys saw the 0xB1 tweet thread the other day, but like non-transparent lending like that, where people are allocating your tokens without you knowing where they're going, is a nightmare. So on our UI, you'll be able to see every single market maker that's borrowing in every single pool, how much they're borrowing, and the actual on-chain transactions of when they created the loan and when they're paying back interest. So that'll all be completely visible on chain, and you'll be able to see what exchanges are they moving tokens to, when are they withdrawing. So yeah, it's going to be incredibly transparent.
Awesome. Yeah, that makes sense. Raphads asked, do you think that pulling 4% of total supply on DIA is too high? Blah, blah, blah. I don't think he was implying that 4% is like the number you have to go with or anything like that.
Yeah, I think that's a
Yeah.
bit high. Yeah, yeah.
Yeah, that would be like upper bound type stuff. So it'd actually be like much lower than that. I think, didn't you say somewhere?
Yep.
You said what? I
Yeah,
already forgot the number
sub
you said. You
2%.
said something. Yeah, you said something lower than that. So
Yeah.
it definitely wasn't 4%.
Yeah.
Let's see. So somebody asked
Yeah, so
about.
looking, oh,
Oh,
sorry.
go ahead. Go ahead. Sorry.
Oh, I was just saying, I just looked real quick. So 250K is almost exactly 0.95% of the total
Cool.
supply right now. So it's kind of right in that safe area. Yeah.
Cool. So Joker Frog asks, if the proposal is passed, is there a process to sort of cancel the pool in the future after evaluating services? Are there penalties associated with that, etc.?
Oh, so there are absolutely no penalties. The main reason we're talking to token issuers now is, we want a lot of our early supporters to be able to get access to the airdrop of the dAMM token when that does go live, and be able to participate in the future governance of the protocol. So that's kind of the big idea. There's no actual physical lockup or time period. If the proposal is passed, if it passes, let's say, for example, a week later, if the DAO decides, nope, let's undo it, perfectly fine. We're keeping everything very open-ended, and no handcuffs associated at all.
Cool. Yeah. And somebody, just for the record of the recording, somebody asked, what product are you talking about? We're talking about dAMM Finance, or dAMM Finance. And if you scroll up a bit, Mint and Burn, you could see the proposal that they made on the forum that kind of outlines what they do, why they're making the proposal, and then how that would affect Redacted. So feel free to check that out. A lot of people are typing, so I'm just trying to buy time for the questions to roll in for a
Oh yeah, no
second.
worries, no worries.
Yeah, let's see what we
Yeah,
got.
and I guess to let you guys know too, the dAMM airdrop token, you'll be able to stake that not only for governance, but kind of we're big fans of protocol fee sharing turned on day one. So we'll have there will be protocol payouts in stable coins for protocol revenue. So 10% of all market maker interest payments go straight back to stake dAMM holders.
Cool. And Rapheads is following up on this idea of like transparency and kind of tracking what's going on with the market makers. So he's kind of asking, could they like obfuscate the fund somehow, go through like a mixer? How can you get? I guess you guys can't explicitly police every single thing that they do, but I think the fact of the matter is that you guys are just trying to track and report as transparently as you possibly can. Is there more to that, or what are some of your thoughts there?
Yeah, that's a great question. So while in theory they could use things like mixers or like Tornado Cash or something like that, we're finishing up our terms of service right now for all the market makers, and we're pretty strict on what they are and aren't allowed to do when it comes to withdrawing capital. So we might in the future actually limit whether or not they can, if they do interact with let's say they do move Butterfly through a mixer or something like that, we would be able in the future to immediately terminate with them. That could be a violation of the terms of service if that becomes a problem. So we have a ton of control over how market makers actually can interact with the protocol and the tokens on chain. So that's kind of how we are monitoring that side. Yeah.
Cool. Yeah, that makes sense. And XAG has a good question about like under collateralization. I think after the 3AC Celsius BlockFi type stuff,
Mm-hmm.
everybody's like a little bit worried about under collateralized lending and borrowing. And so I guess how is dAMM thinking about like managing all of those risks? And you might have touched on some of that throughout all of your answers so far, but I think it'd be helpful to just kind of walk through that one more time. Like, how are you guys thinking about under collateralization risk and hedging against it, so on and so forth?
Yeah, no, that's kind of a huge part of the protocol, and that's kind of why we made such a push for everything to be on chain. I think overwhelmingly, so we've gotten a chance to speak pretty intimately with a lot of the lending firms, so some Celsius people, some Genesis folks, like people at different protocol, or pardon me, not protocols, CeFi lenders, and generally speaking, when it comes to like 3AC, for example, 3AC was a hedge fund that was incredibly long, and so whenever there was a market downturn, it obviously blew them up. So that's kind of a huge move for us to use a complete credit oracle system where we have to be able to see everything, that we have to be able to see a market maker's entire balance sheet. They have to be from a registered jurisdiction where they have licenses. So the US, the EU, Singapore only to start with. And we need to be able to have full transparency into their trading. So if a market maker's long, like Three Arrows, for example, they would have incredibly low borrow limits. So that's kind of a huge part of the protocol and why we're specifically only going after market makers as borrowers, because market makers are overwhelmingly market neutral. And so that's really what makes the unsecured lending kind of safer to us. Obviously, there's no guarantees on anything. There are always going to be default risks associated. Um, poor trading practices, things like that. But that's kind of why we're building insurance into the protocol too. So there will be a insurance pool. We're debating what token, if it's going to be a mix like 3Pool or it's just going to be USDC or Frax or DAI. But there will be an insurance pool that'll be receiving a portion of protocol revenue. Very similar to how Maple Finance does theirs. I'd recommend everybody check Maple's out. They have a great insurance system that we're going to be using a very similar model to. So there will be insurance as well in case of defaults to provide first loss capital to repay any pool where there's a default. So yeah.
Cool. Yeah, super insightful. I don't think most people knew that about like the way market makers work, and that they're actually usually very neutral in their positioning. Um,
Mhm.
People have also been asking about like this idea of like helping ecosystems get centralized exchange listings, and I don't think that's like a promise that you guys make, but maybe kind of walk through what that process is kind of like. Ultimately, I think it just has more to do with like the connections that market makers have, right?
Yeah, exactly. So we've over the years gotten to work really closely with and are invested in by a number of exchanges, like the three I mentioned, Woo, Gate, and Ascendex. We work really closely and make markets for most of the top 30 exchanges by trading volume. And so we work really closely with a lot of their listing teams as well and refer a lot of projects. So, a project as established as Redacted is not going to have a very hard time getting listings on a lot of these exchanges, just to be very candid from our experience. So that's kind of our perspective on it. We spoke with actually Woo recently, and yeah, they were incredibly interested in listing Butterfly as well. So, the main problem for a lot of these exchanges, generally, why uh, many don't list large projects, is they don't want to buy tokens in the open market and not be able to hedge them for a listing, for example. So dAMM actually opens up exchanges to be able to list more assets because they can borrow directly from dAMM and not have to worry about hedging the tokens themselves, just simply returning the same number of tokens and paying interest in it. So it opens up a lot of exchange listing opportunities as well.
Yeah, cool. Makes sense. And people keep everybody. So just to be clear, so this 4% of butterfly supply number keeps getting thrown out. That is not what's being requested here. As
Yeah,
mentioned
no way.
by Josh previously, it's like the recommended number was something like 0.9%. So it's actually less than 1%. So just
Yeah.
to clarify that one more time for the people in the chat who I guess may have missed that part of the conversation. And then Joker Frog said that the insurance pool is a nice addition. I agree. And then I guess one question I have too about the dAMM token. So you mentioned kind of governance and receiving fees. Can you outline a little like more explicitly kind of what the dAMM token's role is within the broader ecosystem?
Yeah, absolutely. So, starting off, dAMM won't have much in the way of governance rights, but it will have direct access to protocol revenue. So,
Cool.
10% of all market maker interest payments across the protocol go straight to staked dAMM holders. So, if you stake dAMM on the platform, you will immediately be able to claim 10% of all protocol revenue that accrues as interest is paid. So that's the main usage day one. But we do plan on integrating more governance in. We actually want to move interest rate mechanisms and being able to update interest rates for respective pools. Give that over to the DAO and allow the DAO to vote on that. Oh, Sammy, I just saw your question in there. Yes, you are correct. We absolutely have the ability to blacklist market makers from pools. That is absolutely the case. Yep.
Yeah, cool. And so for the recording, Sammy's question, since he can't get his mic to work, was
Oh, sorry about that.
no worries. He was asking, if we don't like the actions of certain market makers, or if we don't like the actions that certain market makers are taking, can we blacklist them? And Josh's answer was yes, they can be blacklisted. And XAG asked for some clarity on that. So who actually facilitates the blacklist there? Is that something we could have the final say on, or that you guys have the final say on, or what is kind of the setup there, or is that a governance thing?
Yeah, so we would be given that that's a pretty central, given that that has to do with credit risk, that won't be available for the DAO. That would be going directly through us. A
Got it.
token issuer could request a market maker not be able to borrow from that pool, and we can enforce that. Yeah,
Cool. Yeah.
we would enforce that through the dAMM Foundation. Yeah.
Makes sense. Yeah. And Omnia said his guess is that it's coordinated, and yeah, it sounds pretty much like
Yes.
that. And then Joker Frog said, you could start with an initial pool size as a percentage of token circulating supply and evaluate from there. That's right. Like that's the basis of the conversation that we were having there. It seems like you guys have a ton of flexibility within the platform to leave room for evaluating, making good decisions, so on and so forth, and just like going from there. So it's not like this thing where we have to lock up 2% of total supply and keep it there for 1 year, and there's no flexibility or anything like that. It seems like you guys offer a lot of flexibility through the arrangement.
Yeah, absolutely. I mean, that really comes from a philosophy of being token issuer first instead of market maker first. I mean, over the years we've kind of seen, I mean, you guys have probably all heard the nightmare stories of market makers getting several percent of the token supply and just absolutely destroying the token with a call option they get. And really, we want to build a platform that completely disincentivizes that. And it kind of actually leads into another question I saw above asking about I think RatPads asked what you can do with free tokens aside from shorting. A lot of that has to do with exchange listings. So market makers in general have incredible trading strategies generally when it comes to yield farming or cross exchange arbitrage or things like that that allow them to generate great returns on altcoins. The spreads on altcoins are significantly wider always compared to things like BTC and ETH. And so when you ask a market maker, is there opportunity there? They're always going to say yes. So wider spreads are great for market maker profitability. So that's kind of what we expect market makers to do with the tokens. Yeah.
Cool. I'll wait another second for any more questions. We answered a lot of them, so if there's any more, let us know. Sammy's typing. All right, he didn't have a question. XAG is still typing. Let's see. dAMM token airdrop. What shared protocol revenue is a nice incentive. Yeah, I think that's the point, right? And they can kind of like airdrop with protocols who are long-term aligned and helping bootstrap initial adoption. Let's see. Maybe you can bring up what they're doing with regards to that. Sammy, are you talking about smart contracts risk or security? Can't tell what you're asking.
Sammy able to connect again?
No.
Yeah, he's basically talking about like additional smart contract risks, right? Like, are there anything
Gotcha.
or are there any backstops in place? Like Figgy had asked, is there any insurance external to dAMM? Like for example, can we purchase like smart contract cover, or can anyone purchase smart contract cover for dAMM?
Yeah, absolutely. So we are building in smart contract cover. I think we know a couple teams and a couple of the bigger insurance protocols like Nexus and Neptune. We have some connects. So I think one of the things we will want to do is launch a smart contract cover or insurance pool. To start with, we are only going to have market maker default insurance, but I definitely understand the point there. All of our code is currently open source, and we're going to have a bug bounty on it as well. So yeah, and the audit is public as well. That's in our Git book.
Yeah, I did blacklist Sammy from the call for everybody asking. I was tired of. I've had to hear him all week, guys, and like it's the end of the week. It's Friday. I'm trying to have a good day. Like I don't need Sammy up on the call, like bothering me. So
that's my favorite message. You shorted this call.
Yeah, and Sammy's been using this adjective exotic a lot, and I'm just sick of hearing it. I don't want him on the stage saying exotic over and over. So actually, I did everybody, including myself, here a favor by keeping Sammy off the stage. Yeah, it's an exotic Friday.
Oh, that's hilarious. Oh,
cool.
and this is totally. Oh, sorry.
Cool. No, go ahead.
I was just gonna say one more thing too that I kind of have gotten really excited about learning about is Dinero and the stablecoin side. That's another thing we'd love to chat about because as you guys know, like the thing market makers are most desperate for is stablecoin liquidity. So that's definitely a really, really interesting avenue of collaboration as well.
Yeah, for sure. And Dinero's in the pipeline, but I guess keeping Sammy off the stage is bullish because he would start listening about it, which is not ideal. So somebody, we kind of touched on this earlier, but somebody asked, how do we make sure that people don't short Butterfly? And I don't think there's any way to like guarantee that, but we've kind of talked about some of the mechanisms in place to hedge against that type of risk, right? One was sort of limiting total supply within the pool. The other one was the ability to potentially blacklist market makers that are engaging in market activity that's not conducive towards like the health of the ecosystem. Are those two correct? And is there anything else there that I missed?
That's absolutely correct. And we also are we have a dedicated credit risk team internally that's monitoring all of the smart contract addresses and all of the movements of tokens between market makers and what exchanges they're depositing to, what the price movements are of different tokens that they're borrowing. And if we notice it, to be very candid, it is not hard to notice if a market maker is short selling a token. You notice that they move, let's say, a couple $1,000,000 of a token to Binance, and the price goes down 20% within an hour. It's pretty easy to tell what they're doing. And we're consistently and constantly monitoring that. We've got through System 9, we've got amazing tech to be able to monitor a lot of these on centralized exchange price movements and trading activities. So that's something we're definitely going to be keeping an eye out for at all times, and being really, really vigilant about. So yeah.
Cool. Any other questions, everybody?
I would say perhaps like taking a shift outside of like the protocol mechanics, like looking into more like something that can possibly tie into current redacted products or maybe even future products. Like, what is the broad potential for something like dAMM, if any?
Yeah, that's a really interesting question, because as we start expanding out the governance, I think that's something that's going to be really interesting. I think we want to move our long-term vision in terms of decentralizing the governance of the protocol is to move everything that is not the actual credit risk management and borrower whitelisting over to the DAO. So everything in terms of interest rate mechanics, the actual liquidity mining mechanisms of the protocol, very similar to Curve. We want to move as much of that as humanly possible over to a gauge style management or DAO management. So I definitely hope there will be some fun bribing as well. And we're even, something we're considering too that kind of ties in a ton with Redacted is having staked dAMM be vote locked and vote escrowed for different periods of time. So having like a liquid wrapper for something like on Pyrex, for example, for staked or governance dAMM or VE-DAMM would be really interesting too.
Yeah, interesting. I'm just wondering, like, for example, based on the size of these pools, like, can certain market makers like basically compete to be voted in as like the primary, I don't know, like, utilizer of the pool or something? Like that's just what's kind of running through my mind at the moment. Maybe I just don't understand it enough, but yeah.
Well, something we put in the white paper that I think like really would apply, especially when trying to disincentivize short sellers too, is so we are going to be through our credit risk partner, we're going to be we're going to use them to verify trading volume of the market makers of tokens that are borrowable through dAMM. So something that token issuers can do is actually like, if you guys really want to incentivize, higher volume trading of on centralized exchanges, you could liquidity mine Butterfly directly to market makers based on how much volume they actually do or what percentage of the daily trading volume they are, things like that. So kind of incentivizing good actors and really crowding out borrowing for anything other than high volume market making. And Mint and Burn asked who is the credit risk partner. I would say their name, but we will be announcing very shortly. We're finishing up kind of the final integrations with them, but yeah, very, very excited. We'll be announcing that in the next couple days.
Is it possible by any chance, instead of like just the looming risk of being blacklisted for bad behavior, is it possible to have collateral put up as well by market makers just to disincentivize the bad acting even more, and like in that event like have like pretty heavy slashing risk or something?
So I'm not sure that while I understand the principle, I think kind of threatening market makers if they don't trade the way we want them to trade, we could seize their assets. I don't know the legality of that, or
Yeah.
if that's available. Yeah, but I think like yeah, it's an interesting problem. I think we're exploring more solutions than just the outright threat of blacklisting. And in terms of like collateral,
Mm.
so the only most market makers that are not just the unbelievably high quality names like your Wintermutes, your GSRs, your Alamedas, unless they're
Yeah,
unbelievably high quality and massive market makers like that, we are going to require them to put up collateral or over collateralize their loans.
got it.
So that's yeah.
Okay, and
Yeah, I was
yeah,
just asking more so like for. Go ahead, Colton.
I was just gonna say, like, to be clear, everybody keeps talking about like shorting and stuff. So just like shorting is an important part of an efficient market, right? Short, going long. You have to have both of these to have an efficient market. You can't just have a long
Yes.
only market. You can't just have a short only market. And so really the question should be around, is there potential for a malicious actor to come in and basically short the token to oblivion? And I think the overall answer to that is no, right? Like that's
Yeah,
the
that's
the risk
correct.
that is hedged against by all of the measures that Josh and the rest of the team have taken. So that's the point I want to add. Like
Yeah.
everybody's really caught up on the shorting thing, but like people are going to find ways to short a token regardless if they want to, right? And so what you have to make sure you're not doing is encouraging outsized short behavior by taking on unnecessary
Mhm.
risk. So this is the thing that we should focus on, not whether or not shorting is possible. And as a business, they don't have they don't have like the obligation to like kill all of their relationships in order to make sure that everybody
Mhm.
is not shorting a certain token, because shorting should be allowed in an efficient market. So I just want to put that out there.
Yeah,
Yeah.
you're totally right, Colton. And I think like one last point I want to jump on, Rat Pads. I saw you'd mentioned we have market makers at heart. I just want to jump in a little bit to kind of show why we care so much about token issuers and how we put them at kind of on a pedestal compared to the market makers. Um, this protocol came out of basically 2 years of us pitching versus a lot of the larger market makers and seeing exactly what you described as like basically enforced short selling through call options, and wanting to build a model where token issuers actually are able to generate revenue through their market making services. If we had market makers' best interests at heart, like in terms of, I mean, we definitely are building a product that's incredibly valuable for them. But the current model is so much more profitable for them on a deal by deal basis than dAMM. If you like think about why, market maker X, let's say, they come to this a random token issuer. Typically, the deal structure is they get a immediately vested call option for anywhere between 0.5% and 4% of the total supply of the protocol, not just circulating, the total supply. That they set the strike price at usually the at the money, whatever the token price is that day, and they can begin liquidating whenever they want. So it's really, really bad for the token issuer. Or, they charge insane retainers. And our goal was to build a platform in which, market makers are still able to make, tons off of, cross exchange arbitrage and market neutral trading strategies, but, really destroy that business model of, call options and, giving away several percent of your supply to a market maker for almost no reason. So, yeah.
Cool. Any other questions from people? Because I feel like we've answered a lot of good ones too, which has been helpful. Is there anything we missed? Let's see. Somebody said shorting. Somebody said shorting is an important part of the markets, just as long as it's not my bags.
Yeah, yeah. And
Uh,
good to see crypto analysts confirming. That's that yeah, I won't call out any names, but it is quite egregious. I mean, like if you guys just want to look at like, sister protocol in Ohm, for example, I mean, if you go look at like all the Ohm market maker proposals and compare them to what we're offering, it's like shocking. I think like the smallest deal was for like $15 million in call options of Ohm and Gom. Um, yeah, which just like blows my mind. So yeah.
yeah, it's pretty funny having done some of these deals behind the scenes. Like some of them you get and they're like laughable. You can tell that they're
Oh yeah.
like, I don't want to, again, I don't want to say any names, but you could tell like some of these like firms are like trying to clearly take advantage of projects that don't know any better, and in some cases they do it publicly on a governance forum. And like
Oh yeah.
they're
It's
totally fine
shocking.
with it.
It's
Yeah,
shocking.
it
Yeah.
really
And
is.
like the way if you look at TradFi, like the way this works in TradFi is market makers have to go through like major banks to borrow stocks and pay interest. Like exactly what we're basically porting over the TradFi market making model into crypto. There in TradFi there would never ever be a deal occur where like a market maker let's say like Citadel goes to Apple and says, "Hey Apple, lend us, $1 billion worth of your stock and give us a free call option on it." That would just be unheard of. Like it's laughable, and like that's the norm in crypto. It's mind blowing.
Yeah,
So
it is.
yeah,
And like and a lot of the time they actually won't budge on the call option itself, and so it's just a matter of like negotiating the price. And
yep.
it's just like, dude, you're basically being held hostage to get like a market maker agreement, which is crazy.
Yeah, exactly. And then usually you only get an intro to like one or two market makers, so you can't shop the deal around. You can't like go compare different market makers' rates or get reviews on them or anything like that. And that's kind of like I won't leak too much alpha, but that's really the next product we want to build is like a rating system for market makers for token issuers, so that you guys can actually see like which market makers are the most beneficial, incentivize them to borrow your token, and work directly with them. So yeah.
Yeah, fair enough. Crypto analyst really likes what you guys are doing, so I don't know if he's a plant by you guys and if he's actually part of the
Oh
team or not.
no, I don't know who that is. Sorry,
Yeah, I'm
I
just
swear.
trolling. I'm
Yeah.
trolling. Let's see. Sammy said healthy discussion. Yeah, it is. And I think like all parts of this, right? Not only the discussion about what you guys are building, but the discussion about like what's going on behind the scenes with some of these market makers, because I think a lot of people don't actually fully understand that. So it's cool that you guys have an understanding so that you can kind of communicate the benefits of what dAMM offers relative to peers.
Yeah,
Let's
thank you.
see.
Thank you so much for the time as well, guys. I don't want to take too much away from the dev call. Incredibly grateful for getting the chance to kind of break down the details and everything like that. And if you guys want to learn more about the protocol, the mechanisms, all that, there's a ton more about the technicals and everything on our website and on our Git book. And if you have any more questions, feel free to at me in general or DM me. I'm more than happy to answer anything. Yeah.
Cool. Well, awesome, Josh. Yeah, really appreciate you coming on and answering all the questions. I think this was super helpful. I know there was a ton of discussion going on in our general chat earlier this week when the proposal was shared. So I'm glad we kind of walked through all of those questions and concerns. And so again, everybody make sure you check out what they're doing at dAMM and you check out the proposal that they made. And feel free to like ask some of these questions on the proposal if needed, or give some feedback that you have based on some of the stuff we talked about today. And then I'll make sure to have this recording up by the end of the day. That way people can kind of listen to the recording, go through it again, and make sure all of their questions were answered. So thanks again, Josh.
Absolutely. Thanks so much, guys. Have a good one.
Yep, you too. Cool. So on to some other redacted stuff. That was fun. I always like walking through some of these more like niche topics in the space. I think it's super helpful, especially for people who aren't too familiar. What should we talk about first? Funky, I'll pass the torch to you. What do you want to talk about first?
Should we touch on V2?
Yeah, we can touch on V2. So we have gotten a lot of questions about sort of redacted V2, rlBTRFLY rollout, the token migration, all of this stuff. So just to give an update on where we're at, maybe like Never or Kieran, like one of you guys can kind of walk through some of the auditing stuff, like where we're at actually in the dev process, and then we can touch on some of the timeline stuff.
Yeah, sure. So contracts are basically done, right? And like we're working with like Olympus to also migrate our liquidity to using Kerdat, the original custom model proposal. Um, and so basically everything that we're kind of waiting on right now is UI. We're like redesigning our entire UI to kind of like just to be like a lot more clean, and also like we're removing all the functionality. Like we're not going to be introducing bonds for like a while. Kind of like owing to the fact that like our emissions are a lot lower now. And so we're going to be carrying out like a new UI. Audit's basically done. And yeah, so like what we're going to do is we're going to lock in the UI, and then we're going to announce a date for the actual migration. And then what's going to happen is that like user will have like slightly less than a week to actually lock their tokens in order to get rlBTRFLY before we do like the first issuance of dividend.
Cool. Yeah, and Sammy's taking blame for the RL date. I think that's something we all did. I won't let Sammy take all the blame for it. Like, I think we were a little more optimistic than we should have been on the dates. We can be transparent about that. Some of the stuff took longer than we thought, and people are asking for another date. Right now, we don't have another date. It will, like we keep saying, it will be soon, but for sure it will be soon. I think the one thing that we have to keep reminding people of is that there is going to be retroactive rewards from the first of last month. So early RL lockers will benefit as if RL already launched last month, right? From a rewards perspective. Maybe Funky, you can walk through that a little bit.
Yeah, that's a really good point. Is that, you know, obviously you won't get your rewards now, but you know, you're no worse off, you know, if we launched, you know, in a week, 2 weeks, etc. And I think like like we're taking our time, and I think that's a good thing because you know we've seen other protocols do like token migrations and like, you know, V1 to V2, um, and we want to make sure that everything's ready and, you know, we can have like a seamless transition, as seamless as possible transition from V1 to V2 for all the moving parts. Um, so given that, you know, we will be distributing protocol revenue that has been accrued and butterfly missions that would have been distributed from 1st of June in the first epoch, you know, if you're locking for the first epoch, you will be in the same position you are now. Actually, you'll actually be in a better position because right now you're getting staking rewards. So yeah, there's no real rush. Obviously, we're working hard to get it out of the door, but we want to make sure that it's in good shape when we do that.
Yeah, and we have Damien asked like how long people will have to lock after it actually goes live. So do we have information on that?
So at least so the epochs are 2 weeks, right? So depending on what kind of day of the week we launch, it'll be between 1 and 2 weeks. So people at least have 1 week. And what we'll do is once we're, you know, in a position to launch, we will announce a date where we will do it, so that, you know, people can get ready to do the transition. But after that date, people will still have, you know, 1 to 2 weeks. So uh, you'll have adequate notice, you know, for, you know, you need to log.
Yeah. So and for everybody concerned about like missing that sort of first window, we will make sure to shout from the rooftops every single day that people need to migrate or move their butterfly or do whatever the final process ends up being. We will make sure that people are very aware of what's going on and how you should do it. So don't feel like you're going to, unless you just disappear off the face of the earth for a week and a half, 2 weeks, it will be very hard for you to miss the process. Let's see. I just saw a question. First impressions matter so much, and it's so much more positive EV to roll out slowly with minimal flaws. Yeah, exactly. That's kind of the mindset we're taking on this. Getting this right the first time is very, very important. We also don't want to put anybody's funds at risk, right? So we want to make sure that audits are taken seriously, security is taken seriously. We want to make sure that the UI is clear and people know what they're doing with their funds and why. So there's all of these different processes, right, that have to be sort of, I'm not going to say they're going to be perfect, but they have to be pretty damn good the first time. We don't want to have to, you know, put anybody at risk if we can avoid it. Let's see. Somebody asked, should we stake/wrap any new butterfly buys for now? Or, I mean, yeah, you should always be like staking your butterfly, right? Like this is something that is only a net gain for you. And I'm pretty sure the migration process of going from like staked or wrapped butterfly to the new butterfly token unlocking will be very, very easy. So yeah, there's no reason not to stake your butterfly or wrap your butterfly at this point. Let's see. So Sammy's proposing ideas in the chat. I wish he knew how to turn on a mic so he could be up here explaining this. But basically, he's kind of proposing that maybe we should save the first epoch to only V1 holders so that new buyers don't arb the yield from the delay. Is this something that we're thinking about? Or I guess now it's something we're thinking about. Sammy, do you want to explain? Yeah, you kind of put Punky on the spot. I don't think this is something we talked a lot about behind the scenes. So yeah, we'll move on from that for now. Just wanted to float it for the call. Unless Funky, you have any additional thoughts on that idea?
No, I'm just thinking about how we want to do this in a way so we don't need to like make any smart contract changes.
Yeah.
But yeah, I think if you do it as an airdrop, we just gotta make sure that the right people get the work. But something we can look into.
Cool. The start date. So Figgy wants to mention the start date of the accrued. Yeah, it's what is it? What month are we in? July. So it's June 1. Of course, the first of last month is the start date for the accrued revenue. So any early lockers will benefit from rlBTRFLY as if it launched on June 1 of last year. I mean, not last year, this year, sorry, of last year. That'd be sick. Let's see. Somebody asked if we have any estimations about how much has accrued so far. Funky, do you have those estimations on hand or no?
What I'll tell people is if they go snooping in my Dune account, we have been working on the math for that.
Nice.
So
So there's
I don't have a
alpha.
number on hand, but
Yeah, no worries.
I think Zag's number is close though.
Cool.
It was like, yeah.
Bullish.
And like I was saying as well, we have rlBTRFLY. So we have butterfly incentives on top of that. So the first epoch should be pretty juicy.
Yeah, and yeah, I didn't mean to say last year, guys. Come on. I wasn't even born last year, so let's keep it together in the chat.
Exactly. Just use the recording as a legal contract. Like last year.
Do not do that. Sorry, legal counsel, that Funky is saying these things. Any other like V2 questions? If not, we can kind of touch on some Pyrex and hidden hand stuff possibly. I'll wait a few seconds. Nobody else locked, so I can get the 125 all to myself. Yeah, nobody else lock besides me and XAG, and we'll just split it. If I have some butterfly staked and bought a few in recent days, that retroactive value will be calculated only for the already staked. So that's kind of a good question because I think it means we should probably talk about what the retroactive stuff means. So can you talk about what we mean by retroactive rewards, Funky?
So basically, we've been working on V2 for a while. We kind of we've been working for V2 for a few months now. It's been delayed due to a number of factors, notwithstanding, like audit delays, etc. And because the V2 kind of launch has taken longer than expected, in order to account for that, we are going to calculate protocol revenue to be distributed in the first epoch from 1st of June to the kind of snapshot date of the first epoch. So that basically means that users would basically get the same or better position in terms of tokens that they would have got if we had launched first. So by retroactive, it means that we're, instead of doing 2 weeks of rewards, which is kind of the status quo for rlBTRFLY going forward, for this first epoch, it'll be not 2 weeks of rewards, but it'll be 1.5 or whatever.
Cool. Does that answer your question, Sukuyomi? I don't know how to say that, but I'll pretend I said it right. So
Yeah.
people are
I guess,
asking
like,
about a
in terms-
snapshot.
Yeah, so I guess like what Sammy was saying beforehand about us only giving rewards to people who are V1 holders. Yeah, we need to figure out that out. So
Yeah, don't take that as word as bond on that. Sammy was just ideating out loud. So that's not something that is like confirmed yet. So there's no if and when or if there is a snapshot, you guys will like know about it. So like don't take that verbatim. So that was just something we were ideating out loud. Wait a sec. So someone who buys butterfly only a day, but Rat Pats, there's no snapshot. That I think there's no snapshot. So like it's basically you're really just getting bonus rewards in the first epoch. So there's no cutoff or anything like that.
So what I mean by like snapshot is, there's 2-week epochs, right? And in order to the way that the contracts work, in order to decide which which rlBTRFLY holders get rewards, is that there will be a snapshot date. We'll announce it. So there's a snapshot to every 2 weeks, kind of like for convex. So for convex, the convex epoch starts on midnight Thursday UTC is the start of every convex epoch, and that's when they take a snapshot to see who has bootload convex, and therefore who can vote on gauges, who can pick up rewards. So that's the same thing for rlBTRFLY. Is that every 2 weeks there'll be a snapshot to figure out who has rlBTRFLY, and therefore can collect rewards, for that round. So that's what we mean by snapshot.
Yeah, there's no snapshot for Sammy's idea. Just to clarify what I was saying, because Sammy's idea is like brand new.
Yeah, and I mean, like, also, like, if you were doing a snapshot for we probably wouldn't announce it because we don't want to be game. I don't know.
Yeah, or we would announce it like way after the fact or something like that.
Yeah, or maybe the snapshot would be a date prior to today. Who knows?
Yeah, I mean, maybe it should be like 6/9/2022 or something like that.
6/9/6.
Yeah. Cool. Any other V2 question? Did KP give Punky his old mic? Damn, not like this.
I mean, to be honest, I'm not using my correct mic, so.
Yeah, leave Punky alone, bro. All right. Any V2 questions? Yeah. No, I'm just.
We need to release something new on 6ix9ine, though. Just because he said that.
The 6ix9ine was like last month.
Yeah, 6ix9ine was last month, so it'd have to be 6/9 of next year or 4/20 of next year.
No, the European 6ix9ine. 6th of September.
Yeah.
Not the burger 6ix9ine.
Yeah, I forgot that Europeans do their dates incorrectly, so there's still time.
I mean,
wait,
depends on your definition of correct.
Well, if the only correct way is the way America does things. I thought we knew this by now. There's no other.
How do you guys measure distance? You measure it like burger length or some shit.
Yeah.
Hot dogs per square inch or some shit.
They use Colton's feet. It's like a unit of measurement. Texan foot.
Yeah, we use my foot. It's the Texan foot. Actually, this is true. I've measured plenty of things with my feet. Over the course of my life.
You know what they say about people with big feet, right?
Yeah, it's all true. Will Redacted have a proposal to buy the CVX dip? Thinking face.
Interesting question.
What are we gonna buy it with? Never mind. We can't. There's something. I'm not gonna leak it though. Yeah, Barra said this is being recorded. Yeah, that was all on recording. So, but regarding buying the CVX dip wrap pads, I think Funky's answer was good. Interesting question. Will Redacted have a proposal to buy Haim.eth for our multi-sig ENS?
I think he's. I mean. Look at this emojis.
I know. Let's go. All right, for the sake of recording, I'm gonna stop it here. So thanks everybody for joining, and thanks for listening to the recording.